What if doing nothing now costs you a lot later? Most Americans miss out on wealth by never investing money. You can avoid that mistake by learning to invest now. Investing helps your money grow faster than a savings account. Even small amounts can become big sums over many years. Starting early gives your money more time to grow big. Waiting too long means you miss the best growth years. Think about your future self living a comfortable life later. Investing is not gambling, but owning parts of real companies. Stock means you own a tiny part of one company. When the company does well, your stock becomes worth more. When the company struggles, the stock price can go down. The stock market lets anyone buy pieces of many companies. Prices go up and down based on company news and results. You do not need to watch prices every single day. Long-term investing works better than short-term trading always. History shows the market goes up over many, many years. You can own stock in big companies like Apple or Ford, or you can own stock in small companies with big dreams. The market is like a big store for buying business pieces. You pick companies you think will grow in the future. Your goal is to buy low and sell high much later. But predicting exact prices is very hard for most people. That is why many beginners lose money by trading too much. Instead, focus on long-term growth of good companies. The stock market is open almost every weekday for trading, but you can buy and hold for years without selling. Many rich people built wealth by owning stocks for decades. You can start the same way with small money today. Now let's learn how your money can grow by itself. Compound interest is when your money earns money on money. Your money makes more money without you doing any work. Imagine you put $100 into a good investment. After 1 year, you might have $110. The extra $10 is interest earned on your money. Next year, the interest earns interest on the whole amount. This process repeats and your money grows faster every year. Over 20 years, that small amount can become much larger. Starting at age 20 can make you a millionaire later, but starting at age 40 gives much less time to grow. Time is the secret ingredient that makes investing so powerful. The earlier you start, the less money you need to invest. A teenager investing small amounts can beat an adult starting late. Do not wait for a big amount to begin investing. Even $5 a week can grow into thousands later. Picture your money as a tree that grows more branches. Each year, the tree gets bigger without extra planting work. That is exactly how compound interest works in real life. Banks pay very little interest, so stocks help you more. Now you understand why starting today is so very important. Index funds are a simple way to own many stocks together. An index fund copies the whole market or a big part. You buy one fund and own pieces of hundreds of companies. This spreads your risk, so one bad company hurts less. Index funds are great for beginners who want simple investing. They cost very little in fees compared to other options. Exchange-traded funds, or ETFs, work almost the same way. You can buy an ETF that tracks the whole stock market. This way, you own a tiny bit of almost everything. Many experts recommend index funds for most regular investors. You do not need to pick individual stocks as a beginner. Picking winners is hard even for professional money managers. Index funds have beaten most stock pickers over long periods. They are easy to buy, and you can start with little. A total stock market fund is a good first choice. It includes big companies and many smaller ones too. You get automatic diversification without doing any extra work. This is perfect for someone just starting their investing journey. You can invest in index funds through many different apps. Now, let's talk about special accounts for retirement savings. A 401k is offered by many employers. You put money from your paycheck into this special account. Often, your boss adds extra money to help you save more. That free money from your boss is called a match. Always put in enough to get the full boss match. It's like getting extra pay that grows for your future. An IRA is another good account you can open yourself. You can put money into an IRA every single year. These accounts give you tax breaks to help your money grow. Use them for long-term retirement goals in your future. You can open a regular brokerage account with no special rules. This account lets you invest for any goal you have. Many apps let you open an account in just minutes. Popular ones include big names that are safe and trusted. Always choose a company that is regulated and well-known. You'll need your social security number and some info. It's free to open and costs little to use usually. After opening, you can move money from your bank easily. Then you search for the index fund you want to buy. You type the ticker symbol, like VTI for one fund. But don't worry about symbols, as apps make it easy. You choose how much money you want to invest right now. You can start with as little as $1 in some apps. Then you click to buy and own your first investment. It is that simple to become an investor in America. You can set up automatic investments every week or month. This way, you invest without thinking about it each time. Automatic investing helps you build the habit without any effort. Now you know the basic steps to begin your journey. Let us go over them one by one in simple order. Step 1 is to get a regular source of income first. This can be a part-time job or your weekly allowance. Step 2 is to save some money before you invest it. You need a small emergency fund in case things go wrong. Keep 3 to 6 months of expenses in a safe place. Step 3 is to open your investing account on a good app. Step 4 is to pick a simple index fund to buy. Step 5 is to buy your first shares with some money. Step 6 is to keep adding money regularly over time. Step 7 is to leave it alone and let it grow. Do not check the price every day, as it will change. Focus on the long term and ignore short-term ups and downs. Now let us learn about a smart way to invest regularly. Dollar cost averaging means investing the same amount every month. You buy more shares when prices are low and less when high. This lowers your average cost without you timing the market. It takes the guesswork out of when to buy or sell. Just invest the same fixed amount on the same day monthly. This strategy works well for beginners who want steady progress. It removes emotion from investing, which often causes bad decisions. Many people make mistakes that cost them a lot of money. One big mistake is trying to time the market perfectly. No one can predict exactly when prices will go up or down. Another mistake is putting all money into one single stock. If that company fails, you can lose most of your investment. Always spread your money across many companies using index funds. Chasing hot stock tips from friends or social media is risky. Those tips often come too late, and prices already went up. Panic selling when prices drop is another costly beginner error. Prices go down sometimes, but history shows they recover and rise. Stay calm and keep investing even when the market feels scary. High fees can eat away at your returns over many years. Choose low-cost index funds to keep more money growing for you. Borrowing money to invest is very dangerous and not for beginners. Only invest money you can afford to leave alone for years. Do not invest money you need for rent or food soon. Investing is for long-term goals, like retirement or college. Short-term money should stay in a regular savings account. Now you know the main mistakes so you can avoid them. Let us see some real-life examples from everyday American life. Instead of buying a new video game every month, save that money. Put the game money into your investing account each month instead. Skip the daily fancy coffee and invest that $5 daily. Over a year, that small change can add up to big growth. When you get birthday money from family, put half into investing. Your future self will thank you for that smart choice today. If you get a raise at work, invest half of the extra. This way, you never miss the money, but your wealth grows. Pay yourself first by investing before you spend on fun things. Treat investing like a bill you pay to your future self. Many successful investors started with just a few dollars each week. Consistency beats trying to find the perfect time or perfect stock. Your first investment does not have to be perfect or large. What matters most is that you begin and keep going forward. Review your investments once a year and make small changes only. As you earn more, you can invest larger amounts over time. Your money will keep working even while you sleep or study. That is the beauty of letting compound interest do the work. You are now ready to take control of your financial future. Investing gives you a chance to build real wealth over time. It's not about getting rich quick, but getting rich slowly. Slow and steady investing wins the race for most regular people. You do not need to be an expert to start investing today. The most important step is taking action and buying your first share. Every expert investor was once a beginner who started somewhere. You have the same opportunity right now in front of you. The stock market is open to everyone, including teenagers with jobs. Many states allow minors to invest with a parent account. Talk to your parents about starting a joint investing account soon. Learning about money now will help you for your whole life. Schools do not teach this, but you can learn it easily. Books and videos like this one can teach you the basics. Practice with small amounts until you feel comfortable with the process. There is no perfect time to start, so begin right now. The best time to plant a tree was 20 years ago. The second best time is today, so take action right now. You have learned the basics of investing in simple, easy steps. Remember to start small, stay consistent, and think long-term always. Use index funds to keep things simple and low in cost. Avoid common mistakes and let compound interest do its magic. Picture yourself in 20 years thanking yourself for starting today. Your money will grow while you focus on school or work. Investing is one of the best gifts you can give yourself. It creates options and freedom in your future life ahead. You now have the knowledge to begin your investing adventure. Take the first step by opening an account this very week. Start with whatever amount you can afford without any stress. Every dollar you invest is a step toward financial freedom. Share what you learned with friends and family members too. Help others start their journey toward building real wealth now. Thank you for watching this complete guide for beginner investors. If you liked this video, please give it a thumbs up. Subscribe to the channel for more simple finance videos weekly. Comment below and tell us your first investing goal this year. Hit the notification bell so you never miss a new video. Start investing today and change your financial future for the better. Small steps taken now lead to big results many years later. You have the power to build wealth $1 at a time. Remember, starting today is always better than starting tomorrow. Go open that account and buy your first investment right now.